Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's weekend webinar. Traders, this is the weekend webinar, and as you know, in our webinars, especially the weekend webinars, we like to take a bird's eye view of the markets or a longer term approach and take a look at what we think these markets will be doing over the next couple of weeks and months ahead. So this weekend webinar is not for day trading, but it is for projection going forward. This video is being filmed on April 10, 2010, but before I go any further, Big Brother has a new mandate, and I have to say this before every video. So, just in case the hearing impaired is with me, for anyone who's deaf out there, I have a friend with me to help you to make sure you get this message. Futures trading is risky and can cause substantial financial loss.
Futures trading is risky and can cause substantial financial loss.
Trading futures is not suitable for all trading accounts.
Trading futures is not suitable for all trading accounts.
Past performance is not necessarily indicative of future results. I hope everyone's got that now.
Past performance is not necessarily indicative of future results.
Thank you very much for your help. Even the deaf people heard me, okay, Big Brother? Now let's rock and roll. Traders, this video is video number 570 of a series of videos. And again, this weekend webinar is to keep you in tune of the longer term picture. And what do we have? Indices clearly heading higher. In fact, we gave a projection on 3/17/10, March 17th this year. We wrote it on our board and we said that we would get to 1290, 1300 S&P this year, 2010. We absolutely stick to that projection, and I don't think that's going to be a high by any means, but I think we will get to the 1290, 1300 level in the S&P this year, if not higher. What else do we have in this video? Bonds are building a huge top. Bonds are building a huge rounded top, traders. I've shown this bond chart to you in many other videos. I've shown it in many classes, and I can show you how come it looks like a big rounded top. I will say this, what you'll see in the bond chart in this segment is exactly what I showed you coming towards the end of 2007 in the S&P market, and it surely was a huge rounded top. Now I'm getting those same signals in the bond market, and I think the bonds are in a huge rounded top. And in fact, I think the top is just about built. Yes, it's building. I think it's 95% done, and bonds are going to work their way lower for the rest of this year. We'll see what happens. Traders, I got a lot of charts to show you, so pull up a chair, pull up a pencil and a piece of paper because you might want to write some notes. And with no further ado, let's go look at the charts. Okay, traders, I'm going to try to rip through these charts quickly so I can make a valid point to you here. And my technical argument is this. The leader, the Dow Jones Transportation Average, always tells us what's coming next, and it leads the way. From what I can see, the leader clearly got above OTAPMA, is above its previous highs, and is now taking off, right? So the leader on the daily looking strong. And the point I want to show you is that the leader goes above the Omni average on the daily, the weekly, then the monthly. And then the followers get right behind it. And you'll see that right here. So on the daily, we are above OTAPMA and off to the races in the leader, right? Let's look at the weekly now. You'll see the same picture here on the weekly, and it looks pretty good if you ask me. The Dow Jones Transportation Average Weekly gets above OTAPMA a few weeks back. So the daily is well above, the weekly is well above, and traders, we don't get below this average without something meaningful happening, because when that happened, that was probably September of 08, and look at the big break we had. Now we're back above it, so you see the daily is way above it, the weekly is just above it. Let's look at the monthly for the leader now. And as you can clearly see with the monthly, it has just gotten above it recently. So the leader has just gotten above OTAPMA recently, but it is the leader. So our followers should not be that many bars above OTAPMA. They should be just getting above OTAPMA. If the leader is doing its job, being the transportation average, the followers should not be that far advanced above OTAPMA. Let's go look at one of the followers right now. Okay, traders, right here we have the Dow Jones Industrial Average daily bar chart, one of the followers. clearly above OTAPMA. And what's interesting on this chart is every time we get one of these V formations, you get a new high. V formation, new high. V formation, new high. V formation, new high. V formation, new high. And this new high looks like it wants to continue. So these V's or these V formations seem to equal new highs on the Dow Jones Industrial Average, which does follow the transportation average. However, so now the daily above OTAPMA clearly, right? Let's take a look at the weekly. The weekly Dow Jones Industrial Average clearly above, not as many weeks as the transportation average, the leader, but clearly above OTAPMA, or the Omni Trading Academy's proprietary moving average. Now let's look at the monthly on the Dow Jones Industrial Average. Traders, the brick and mortar, the big, huge industrial average market, deemed the follower of the transportation average, on the monthly just got above OTAPMA. But as you can clearly see in the leader, it's 3 bars above OTAPMA. The follower, the Dow Jones Industrial Average, is just barely above OTAPMA. It's sitting right here, or the Omni Trading Academy's proprietary moving average. So the follower doing its job on the weekly, the daily, and now the monthly, clearly pointing higher. So now that we've looked at the transportation average and the industrial average, let's take a look at the S&P, because that's the one that we all trade every day. And here's a really interesting S&P chart, traders. Looking at the long-term view now and not thinking about day-to-day day trading, back in March of 2009, the market switched from a bear market to a bull market, and right around this period, we started a video campaign, a bull market video campaign, calling for the next big bull in the S&P. Then in right between Jan and Feb, we got below OTAPMA, and we gave a warning in our videos about the possibility of a dip. Well, the dip did come our way, and then once in March 2010, so in Feb 2010, we gave a warning. In March 2010, we got back above OTAPMA on the daily bar for the S&P. Then we did a video which we called this a full-blown bull market, and we offered a projection in this video. The video date of that projection was 03/17/10, and in that video, we said we'd reach 1290 to 1300 this year in the S&P. So clearly, we have been following this trend properly in our long-term view. Omni has been all over it. Omni did call for a bull market since 317 and did give a projection of 1290 to 1300. That's pretty interesting, traders. We were in the 1130s when Omni came up with the projection of 1290. We are now in the 1180s. In fact, we breached 1190 on Friday. So we're starting to move higher. So traders, the long-term view, Omni's really got this thing nailed down so far. And the daily, you can see, is clearly above OTAPMA. Let's look at the weekly. Traders, the weekly clearly now above the Omni Trading Academy's proprietary moving average, or OTAPMA, and off to the races it looks like we're going. So the weekly looks good. Not as many bars in the weekly above the OTAPMA as in the transportation average, but this is a leader, so we would not expect that many bars, right? So, excuse me, this is a follower, I should say. The leader is the transportation average. It's got a lot of bars above the OTAPMA on a weekly. But the S&P's weekly only has a few bars so far. So it is doing a good job following. Now the next chart is very interesting. The monthly S&P. Look at where it is. It's just barely above OTAPMA right here. Now I'm going to slide the monthly transportation average to my left, and I want you to compare the two. Note how the transportation average on the monthly is much higher, and when you look at the monthly on the follower, the S&P, it just got above it. This tells us that the transportation average clearly is the leader, doing its job, and the S&P will follow it straight above OTAPMA and continue higher. Traders, that is a bull market if I've ever seen one, and I just want you to realize this. On the way down, I showed you the very same series from way back when we were at 1576 in the S&P. I showed you the S&P on the daily got below OTAPMA, then on a weekly got below OTAPMA, then on a monthly got below OTAPMA, and then it was like the end of the world that came our way. Well, now I'm showing you on the way back up on the S&P, the daily's above OTAPMA, the weekly's above OTAPMA, and the monthly is just about above it now. We are in for a pretty solid bull market this year, traders. That is my technical argument in the S&P. Now we have bonds, and let me show you what the bonds look like. Okay, traders, we are looking at the June bond daily bar chart. The June bond daily bar chart. Traders, this is the very same thing that I noticed when I called for top in the S&P back in the end of 07. Huge rounded top. Inside the huge rounded top, you have head and shoulders, head and shoulders, head and shoulders, inverted head and shoulders, another inverted head and shoulders, another inverted head and shoulders, a drop, and then another inverted head and shoulders. Traders, the whole thing is one huge head and shoulders. When you look at it like that, multiple head and shoulders formations grouped together usually indicate that a market top is being built. I kid you not, this is a market top in bonds, and bonds may flutter around here a little bit, but the end result will be much, much lower in bonds. This year, 2010, we expect indices up, bonds down. Now, traders, that's the daily in the June bonds. Take a look at this weekly chart. Very, very convincing. Now we're looking at a weekly chart of the 30-year T-bonds. And what do you guys see here on this chart?
Head and shoulders.
A huge head and shoulders formation on the weekly, right? Now, in the daily, it was full of little head and shoulders inside all the big head and shoulders. So clearly, this is a market top, traders. This is how you spot market tops. This is why you stay with analysis. And if you stay steadfast with your bonds, you will see you will have called a market top for yourselves. Take a look at this, traders. Pull your own charts. Do your own homework. I hope this argument is a good enough technical argument to make you see what very much looks to be where these markets will be going over the next couple of weeks and months ahead. So, traders, you see those charts? There's my technical argument for why the stock market will go much higher this year. Remember, traders, we gave you a projection in a video on 317.10, 1290 to 1300 in the S&P, and we think the S&P will get at least that high this year. On the bonds, we expect bonds down below 109, probably below 105 before this year is out, but none of this can really happen without the Fed raising interest rates, right? We want the dollar and the stock market to go up together and the bonds to get cracked, but the Fed's got to change their rhetoric on interest rates for that to really take hold. But it is already taking hold. As you can see, the bonds, they go up a little and then they hammer them and then they try their way back up and then they hammer them. And I think it's going to stay that way until it finally cracks. You see what's going on in the S&P and the stock market. Dow Jones Transportation Average on Thursday gave us a little warning signal that we might have a down day Friday. The market didn't want to hear anything about it. So it looks to me like this portion of the recovery leg of our bull market, I think that we start ignoring the sell signals from now on when they come out. On sell signal days, we go neutral and then we look for the buy spot because traders, let's face it, there used to be something called the 2-day rule where the S&P will back off for 2 days and you can buy it in a bull market in the past. This bull market does not give us 2 days down. Gives you a half a day down and boom, right back up. So I think we start to sidestep the daily sell signals when we get them. Look at other markets, look at grains and look at the currencies. And when the buy signals come in, we'll trade the S&P from the buy side, staying within the longer trend because as we all know, the trend is your friend. And if you stay on the right side of the trend, you're almost guaranteed to be on the right side when you react. Okay, traders, keep that in mind. Keep this in mind. A stop is your best friend. Always, always have a stop in. Always place it first. And make sure you do not trade without stops, traders. These markets are rough and tumble and dangerous. Traders, we'd love to have you come down to our site. It's www.livewithoscar.com. Jump into our free chat rooms. Allow us to show you how we do analysis of the brand that we just put on the board for you a few moments ago. We hold live classes at the site. During those classes, I lend out my desktop to you, so whatever is happening on my computer screen is happening on your computer screen, anywhere you are in the world. You can hear my voice, you can see me in the camera, and I explain how these charts pan out, how to look at formations, how to judge indicators versus formations. We do a lot of that at the site. So make sure you come on down. A lot of that gets done for free, traders, so come on and check out the free room. All right, traders, I got more studying to do, and you got a lot of studying to do after what I just showed you. So make sure you do your own homework. Make sure you know what you're doing when you do your homework. If you don't know what you're doing, get your butts down to our site and allow us to teach you how to do it. All right, traders, I really hope these weekend webinars are helping to keep you in tune with the long-term picture, where these markets are going over time. This isn't about day trading. This isn't about what's going to happen Sunday night into Monday. This is going out for the next few months. That's what this video is for. I hope these videos are helping you. Okay, traders, that's about all I'm going to say. I'm getting out of here. Remember to keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out.
Stops are in. Emotions are out.